I am going to start off as usual. The first part of the show here is just to talk about what we saw happening in the stock market this week, right? Kind of a summary for the week. We do our daily videos Monday through Friday. We maybe miss one once in a while, but we cover those days for what happened. And then sorry, Monday through Thursday. And then Friday, we try to do the summary. All right. So we'll start with our little chart here we've been updating. This actually goes back to 2018, and you can see the pandemic drop in there and a 2022 drop that was from inflation. Right over our heads is the drop that happened, when they announced the tariffs on Liberation Day and such. And markets come back. And so I think that's what's important about this week, actually. First of all, we're having a good day today. And if it closes, at a new all-time high, we made back the money that was lost that one Friday when they announced they were going to increase the tariffs on China because of tariffs, new, restrictions that they were trying to put into place for rare earth metals, right? So we
Mhm.
dropped 2.7%. And so I know that doesn't seem like a big deal, but it actually kind of is, because you never know, especially when you're having these big runs like this. Are we now going to start a downturn? I didn't think so. We talked about that. There's just too much buying momentum that's happening here. And all of these dips look like opportunities to the dip buyers, right? And they're not done. There's enough money out there, and honestly, to see a true top in this type of environment, I think you need more craziness, just personally, just from my experience of looking back. And again, to me, this is a lot like the 95 to 2000 time frame. So if you really study that and see how that motion happened, look at what happened to the Nasdaq. It doubled, it went up 100%, in 1998. The Nasdaq's no longer that kind of index, to be honest. It's back then it was a lot smaller cap than it is now, but nonetheless, we're still kind of moving along with this. And so, getting a positive week like we're having, it looks like we're having this week, and hopefully setting a new high today, those are big deals to kind of just say, okay, that dip that we just had was probably temporary. Uh, and we're obviously it was if it keeps going. So the big news that kind of driving the market today is the consumer price index. So this is what they call the headline, top line consumer price
Mhm.
index, which includes energy and food. Then they have another one that they use called core, where they take out energy and food. They actually are both the same. So at this point, hit 3%. Now this is the last 12 months. So we actually just hit essentially the same inflation rate that we hit back in January.
Mhm.
3%. So, and this is year over year. So we're looking at, September of this year versus September of last year type of thing. Now, this report usually comes out earlier. It's obviously delayed because of the government shutdown. And then, of course, since they fired the head of the BLS, who does all of the, organizes all of this reporting, it just makes you a little nervous about what the real number might be. I
Mhm.
think it's probably okay, but anyway, so 3% year over year. You can see it's going up ever since the tariffs were announced. Inflation's going up. The inflation, just looking at the month. So if you look at September of this year versus August of this year, was up 0.3%, which again annualizes out at 3.6%. So that kind of matters too. So the trend is upward. Okay, they just had the consumer sentiment survey that University of Michigan does, and they are projecting as consumers that inflation will hit 4.6% year over year within the next 12 months. And so that's so a stat the actual Fed pays attention to because they think that, if people feel like prices are going up, it changes behavior and they start buying things faster, which can obviously create
Yeah,
inflation, right?
and you could kind of see that reflected in earnings reports with a lot of companies, is because if people are, buying things faster than usual because they want to get ahead of the inflation, you can see companies' earnings are going up.
Yeah, that's the weird part about the tariffs so far. We're in the middle of earnings season, right? And we're having the, best earnings season in the last 4 years. Why? I mean, what's happening? Well, a lot of it is, I think, whether you're a company or a consumer, you're thinking prices might be going up. I should probably be buying things I need that I know I'm going to need, try to buy them now if I can, right? And so it stimulates the economy,
Mhm.
makes it look great. So that's kind of interesting how that's happening because we haven't seen the negative impact of tariffs yet. That's going to be a ways off if it does happen, those type of things. So So earnings season has been great. That really helps. And I'm just going to transfer back to here so we can talk about it. Um, the other piece of CPI, I think that's really important is just that the expectations that by a lot of different people that are looking at the CPI is that it will get up into the fours and fours, maybe even into the sixes,
Mhm.
right? We were hit 9% back, or 7 point something percent back in the 2022, dropping.
Yeah,
It's
I think core or not core, but just regular CPI got up to 9, and then
Yeah,
core never got
core
as
didn't
high.
quite get there, right?
Yeah.
So Uh, here's the deal. Normally, the market would be falling, and normally they'd be lowering rates based on that thought process. That's exactly what happened in 2022. They were,
Or raising.
raising rates.
Yeah.
Sorry, they were raising rates, bringing down the stock market. Stock market dropped 28% in 2022 from its high point. And yet the market went up almost, right away today based on this higher inflation number. It was a little bit less than expected, but the trend is troubling, right? I mean, it's going up and going back to 4 or 5 or 6% is a big deal.
Yeah, I think the Fed has made it clear that they're willing to give into inflation as long as they can save the job market is more important to them.
Well, even more importantly, Chairman Powell's directly said that they feel that this is a one-time inflation bump, and they're going to do everything they can to make that happen. So you just told all the market participants that the Fed is going to backstop kind of the inflation side somehow. I don't know how that happens,
Mm.
but nonetheless, and they feel with their 400 economists on staff that the tariffs are going to be a one-time jump, which theoretically could be true, right? So if all prices jump 5, 6, 7%, and then all of a sudden you would get back down to a lower inflation kind of in that 2 to 3% range because, again, tariffs were a one-time deal. The problem with it is the carry-on aspects of it. So it's kind of controversial whether it's a one-time deal or not, because it doesn't make people want more pay, which then means that the companies have to charge more, and you
Yeah,
kind of
does it
get
create
that
a spiral?
create that spiral, which is what happened in the 70s. So we'll see how that all plays out, but the market likes where inflation is right now, and I think personally the market doesn't care because they're buying into the one time only. And if it truly is one time only, it's probably really damaging to the lower end of the income spectrum but might not be damaging to the stock market in the end. So, anyway, I think that's kind of fascinating when you look at what's going on out there as far as that goes. And so we have some pieces though that have changed just in this week. Also, oil is up about 7% in a couple of days. Because of the threatened sanctions on the big Russian oil companies, and so, one of the biggest drivers of CPI that they just reported was actually gas prices were up 4.1%, from this September to last September. So, that's a big one. Oil's a huge impact area on inflation. It's certainly what drove it in the 70s really, really hard. Um, However, we've not seen any real sustained increases in oil any longer. You have too many places that are kind of cooperating and turning on oil, when they need to, when the prices get higher. And the US is in a totally different spot with oil. We're a net exporter now, versus where we were before.
Yeah, and there's speculation that they're going to try and get more oil out of Alaska now.
Yes. So, I suspect that that won't become a big issue. And, it was the big fear when the Ukraine war started and oil went to 130 some dollars a barrel, and it's dropped back into that $70 range, so it's kind of an interesting thing. We've seen China and the US this week start to kind of mellow out some of the wording and stuff, specifically from Trump, just talking about, oh, it's going to be okay, those type of things. Uh, Seems like, they're on a better footing heading into their meeting. They meet next Thursday in South Korea. And so it'll be really interesting to see, you know, I think if something good comes out of that meeting, the market could really go, right? Something bad comes out of that meeting and they tend to, get into a farther fight, that it could be a problem. China, in my opinion, has the upper hand here. I'm not sure, what they're going to do with that. Because a lot of the things that they can do to cut off things actually will hurt them too. So if you slow down the U.S. by restricting, rare earth metals into the U.S., manufacturing supply chain, that's going to ripple around the world and cause problems for China and what have you too. So it is a good threat. It is a big threat, but it's sort of, shooting yourself in the foot kind of threat if you're not careful. So they're, they but they do have it, that and their dominance in pharmaceuticals and all these other things that they've been able to kind of set up that are critical. So it does give them some wherewithal. My hope is that their leverage is enough to actually lower their net tariff because
Mhm.
right now their net tariff is, it's 40%. It's between 7.5 and 50%, but a weighted average of what actually gets exported comes out
Yeah,
about
and then
40.
each little thing has a different tariff.
That's
It's
right.
it's very confusing for
It
everybody.
it could, yeah, I imagine. But you get that down to say 25. I mean, that's a positive impact for for the world's markets as a whole. So that was my weird outlook on this situation with China. Isn't that we're going to end up with higher tariffs with China because of their leverage? We might end up with at some point in time if they continue to push that leverage with some lower a workout with China that isn't at 40%. But I think that's a low probability, but just kind of an interesting outcome, not something normal, not that's what you would not expect on a regular basis. So anyway, and so that's it. It was a pretty good week. Going forward, we're going to be watching the regional banks, yeah, because we've got some situations where watching those loans, seeing how things go, because they're kind of the canary in the coal mine is all this loan activity that's out there as far as
Yeah,
that goes.
usually when you see any kind of fraudulent activity or kind of defaults, that's because the market's there's pressure on the market from the market.
Yeah. So, just real quick summary. This will bottom line kind of what I'm thinking about what's happening with this market. We have severe upside momentum. We have dip buyers that are there ready to go on every dip. We hardly ever even get a chance to get down to a 5% or anything along those
Hmm.
lines. And with that momentum, we have rate cuts, that are coming at us, expected for both, next week and in December, and got these tailwinds that are just driving this. And while that's happening, and the market is really skyrocketing up, you got all these pieces kind of in the foundation that are kind of falling out, so to speak, and
Hmm.
they're going to create potential problems. The narrowness of the market, still the big companies are kind of dominating, the overall thing. The valuations, this is one of the most expensive markets in history, and so there's all of these pieces and everything that you can think of that comes up that's a negative that is kind of chipping away at that foundation, but the foundation is still strong enough for this to catapult itself up for a while longer, like we saw in 2000. But they're just going to keep adding, more and more, cracks to the foundation over time as this thing stretches out. And that's what ultimately. So right now, valuations don't matter. But
Hmm.
they will when everybody starts selling off and starts using that as an excuse. So because that's my base case scenarios. Are we going to have a big run up here and then come back down in some type of a big drop, sort of like we did in 2000. And, again, as long as you got in early enough, you even with the big drop, you probably made some money because the run up came before the drop, which is
Hmm.
nice. So I think that's probably where we're going now. We'll see.